Let me tell you about a neighborhood you've probably never visited in Taiwan, but you've definitely felt the effects. It's called Guanxin, a borough on the east side of Hsinchu City that is a couple of cities down from the capital of Taiwan, aka Taipei. A borough, by the way, is Taiwan's smallest administrative unit, usually just a few city blocks. This week, the finance ministry confirmed that the average household on those few blocks earn roughly 144,000 US dollars a year, and that's nearly 5 times Taiwan's national average. Yeah, it's officially the richest neighborhood in the country again. Now that sounds like a success story, and I guess it is. But here's the thing. What built that street is the exact same thing holding up everything else, which is exactly what we're looking at this week. Hi, you're listening to Beyond the Reefs, a show produced by Radio Taiwan International. Here we talk about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.
A new survey shows that at least 2/3 of Americans believe Taiwan's security is crucial to U.S. interests. The survey released on Monday by the U.S.-based Reagan Institute shows that 66% of Americans overall see the U.S. and Taiwan's economy and security tied together. That includes 62% of Democrats and 72% of Republicans. The majority of respondents were concerned about Chinese takeover of Taiwan and Chinese military expansion.
Now, before we get to the meat of the show this week, here is what's been happening in Taiwan. Last week in the Scoreboard and Locker Room episode, we talked about an economy putting up championship numbers, while the market above it ran on borrowed confidence. This week, the scoreboard, it just keeps scoring. Manufacturing expanded for a 9th straight month in Taiwan. The Purchasing Managers Index, which is basically a monthly survey asking factories whether business is getting better or worse, came in at 60.7. That's comfortably in a growth territory. And the money also noticed. Taiwan's government-run labor funds, the pool that invests workers' pensions, returned 27.7% in just 5 months. That's a gain of just under 67 billion US dollars in the last 5 months. Household noticed that stock trading accounts hit a record 14.5 million and the fastest growing group of new investors. People who are over 60 are putting, well, likely their retirement fund into the stock market. Market analysts are openly using the phrase fear of missing out, FOMO. So the economy is working, the market is euphoric, and this week we found out exactly where all of that money lives. So back to Guanxin, the borough that we were just talking about. The Finance Ministry's new income tax statistics crowned it Taiwan's wealthiest borough, with that average household income of roughly 144,000 US dollars. But the more interesting number is the median number. The income of the household exactly in the middle of that borough, half earning more, half earning less. Guanxin's median is just under 180,000, also the highest in the country. Why does that matter? Well, because average and median tell you different things. Compare Guanxin to the runner-up, Yongfu Borough in Taipei, where it has an average income of around 111,000 US dollars, but a median of just 23,000. So that's a neighborhood where a handful of very wealthy families drag the average up, while the typical household earned just a fraction of it. Guanxin isn't like that. That is Tech Town. That's AI Town. In Guanxin, nearly everyone is rich. And it's not just Taiwan's richest neighborhood, it's arguably its most evenly rich neighborhood. And we know exactly why, because Guanxin sits next to the Hsinchu Science Park. Those households are engineers, managers, and their families, the payrolls of the semiconductor and AI supply chain. Hsinchu City now leads the nation in salary income per household at around 36,000 US dollars. Taipei, by contrast, leads in dividend income. Now that's two different kinds of wealth. One gets paid by the AI boom, and the other one invests in it, I guess. So for regular listeners who recognize the shape of this, it's the letter K we keep returning to. I don't want to relitigate that today. I just want to make sure that you understand the upper stroke of the K letter represents the AI tech boom, and the downward stroke is the more traditional sides of the other industries. But I want to ask a different question this week. If one street can concentrate this much of the upside, where is the rest of the country's money concentrated? Well, the answer came out this week from 4 completely different sources, and every one of them points the same direction: America. Starting with the bank. Taiwan's central bank reported that the banking sector's exposure to the United States, that's the loans, deposits, and securities that Taiwanese banks hold there, essentially where Taiwan's banking system parks its money, hit a record $209 billion at the end of March. The U.S. has now been the top destination for 43 consecutive quarters. That's nearly 11 straight years, a streak older than some of the AI companies driving it. Meanwhile, exposure to China peaked back in 2021 and has been falling ever since. The gap between the two is now nearly $160 billion, and they're widening. So Taiwan's economy, or at least the banking sector, is decoupling from China and coupling with the US. Now, the factories. The Economic Ministry's annual survey found that record 52.9% of Taiwan's export orders were produced domestically in 2025, and the share produced in China and Hong Kong fell below 30% for the first time ever. For 3 decades, the model was take the order in Taipei, make the goods in China, maybe Shenzhen. That model is quietly being dismantled order by order. Now, the boardrooms. The government approved TSMC's $20 billion capital injection into its Arizona operation, the 6th such approval, bringing the cleared total to $44 billion. This year's outbound approvals are the largest on record. And now the state houses. Oklahoma just opened a dedicated Taiwan trade office. Taiwan is now the United States' 4th largest trading partner. Bank ledgers, order books, boardrooms, state houses, 4 independent data sets. And they're all pointing in one direction. The Taiwan-U.S. economic relationship has become genuinely symbiotic. America needs the chips, Taiwan needs the customer, and nearly all of it, from Guanxin's paychecks to the central bank's balance sheet, is the same underlying bet at different scales that the AI build-out has to keep going. Which brings us to the strangest story of the week, because this was also the week Taiwan's legislature decided to get serious about protecting investors from a risky speculative market. Just not that one. On Tuesday, lawmakers passed Taiwan's first comprehensive law regulating cryptocurrency. And credit where it's due, it is a rigorous piece of legislation. Any virtual asset service provider, that's any business helping people buy, sell, or store crypto, basically an exchange, now needs license from the Financial Supervisory Commission, Taiwan's top financial regulator. Makes sense? The law also creates Taiwan's first framework for stable coins, digital token pegged to a real currency, designed to always be worth, say, exactly $1. So issuers must hold full reserves, real assets, backing every single token, kept in a trust at domestic financial institutions, walled off so that even if the issuers goes bankrupt, creditors can't touch the money backing your tokens. Issuers can even pay interest on holders because the moment a stablecoin pays interest, it starts acting like a bank deposit without a banking license and it tempts the issuers to gamble with the reserves. Break the rules and you're facing up to 7 years in prison. Manipulate prices, up to 10 years. So, careful, protective, genuinely well designed. And then now let's take a look at the stock market. The TAIEX rose 59% in 6 months, closing at 46,125 points. 14.5 million trading accounts. That's more than 1 account for every 2 people living in Taiwan, children included. 250,000 of the new ones opened by investors over 60, So the fear of missing out, FOMO, and sentiments is definitely in the analyst's own words. And here's the number that should make you sit up. Because the Philadelphia Semiconductor Index, the benchmark tracking the world's major chip stocks, Taiwan included, has now risen 237% over 14 months. At the peak of the dot-com bubble in 2000, the same index's best 14-month run was 234. We have exceeded that. Is the bubble coming? We don't know, but arguably we're outrunning the most famous bubble in modern history, at least on price. And here's the complication. Valuations tell a different story. The price to earning ratio, that's how many dollars investors pay for each dollar of a company's annual profit. Put simply, how expensive a stock is relative to that the company actually earns. That number is far lower today than in 2000. Because this time, profits have largely kept pace with prices. So a bubble by price, not yet a bubble by earnings. That's a good thing, right? It means that your bet on AI companies is at least backed up by their performances in earnings. But let's not forget, there could still be a bubble in the near horizon, right? So in the same week, the government decided to build a fence around the cryptocurrency kiddie pool, I suppose, while the deep pool, the stock market big pool, is not being regulated as much. Now, the fair question is, why doesn't somebody do something about the big pool? Because at this size, well, nobody can. Think it through. The pension funds can't sit out a 59% rally. Tried explaining to millions of workers why their retirement fund missed the best market in a generation. The regulators can't tell 14.5 million account holders to lighten up. That's not a policy, that's panic. People will start to worry. Why can't I invest? Why are you suggesting otherwise? And the government can't lean against the sector that's writing its tax receipt. Hsinchu's Guanxin borough's income tax filings are the fiscal windfall. Every county in the country reports higher income this year, and that revenue, that is sweet nectar, is already being spent. Now, we've been tracking the other side of the stock market trade since last week. There's a record of foreign selling, the money that's quietly heading for the exit, even as domestic money floods into the stock market. If that AI supply chain selling continues, the people left holding the market are increasingly the pension funds and the first-time retirees and just generally domestic Taiwanese people who are still buying into their own stock market. And Taiwan isn't unique in any of this. South Korea's Kospi rose 64% in the second quarter, its best since the index's early days. On the same AI trade, with the same retail rush, even the guardrail story has an international parallel. Washington passed its own stablecoin law last year. In the middle of the rally, everyone, it seems, regulates the small casino while the big one, the stock market, roars. So if the AI boom stumbles, it won't just mark down portfolios in Taiwan and the rest of the region, it'll mark down tax bases, pensions, and paychecks that entire economies have quietly rebuilt around it. So here's the reframe. Guanxin isn't an outlier, it's a prototype. I'd argue that Taiwan hasn't just concentrated an industry over the past 2 years. It has concentrated its tax base, its pension returns, its household wealth, and now its household hopes on the continuation of a single industry, routed overwhelmingly through a single partner, the US. The crypto law proves that the state absolutely knows how to build guardrails when the risk is legible and the industry is small enough to fence. The open question is whether anyone can build guardrails around the main event, or whether, past a certain size, the trade stops being something the state can actually regulate and start being something that regulates the state. You know how the saying goes? If you owe the bank $100, that's your problem. But if you somehow owe the bank $100 million, that's now the bank's problem. Thank you for listening to the show. I'm Joey Cho. Tune in next week to find out more about socioeconomic issues that are faced by Taiwan and their broader impact around the world beyond the reefs of this island nation.